Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be doing a stock analysis on Pinduoduo, ticker symbol PDD. Now I may switch back and forth between Pinduoduo and Pinduoduo, so please forgive me in advance if I'm murdering the name completely. So for today's agenda on Pinduoduo, I'm going to give a brief business description. We're going to look at the fundamentals and financials. We're going to look at the 2021 Q1 results that were just released. We're going to look at shares outstanding, growth potential, which is quite high. We're going to look at the share price history, and then finally I'm going to give my thoughts and a price target for Pinduoduo. If you're new to my channel, I do videos on personal finance, investing, and stock analysis, so please consider subscribing if you like this kind of content. Also hit that thumbs up button, it really helps me out with the YouTube algorithm. Now to the content. Now Pinduoduo is really an e-commerce platform in China. They advertise themselves as the largest agricultural focused technology platform out of China. One of the goals they have is to become the world's largest grocery store. And if we look at their growth, it's been quite large, and we'll see that when we look at their fundamentals here soon. And what they do that's a little bit different is what they do is they try to integrate social aspects into their buying experience. They try to make it kind of feel like a social media platform while they're buying. So it's kind of like society's driving you to buy something versus you deciding to go buy it. So I'm going to let you do some more research on that on your own, but that's at a high level what they're trying to achieve. All right, so diving into the fundamentals in between 2016 and December of 2020, if we look at their growth, it's been quite large, starting at $73 million in December at the end of 2016, all the way up until the end of 2020. You can see that they've grown from $73 million all the way up until $9.1 billion. So that's a fairly large. If we look at their year-over-year revenue growth, 245%, 652%, 129%, 97%. So it looks like growth is definitely slowing down, but still at growth over near 100% in the last 2 years is quite substantial. Looking at their gross margin, that is also fairly high, sitting in the previous year about 67%. And for most of these companies, they're in the growth phase. That net income is negative, so we're not going to get any P's off of that. Now, if we look at their free cash flow, this is one thing that I am a little interested about, because it almost seems like they don't have, relative to their income, it doesn't seem like they have much capital expenditures, which is a little surprising to me for a company that's growing. Doesn't look like they're investing on the CapEx side very much, but again, it could just be really the cost of their businesses on cost of goods sold is really. But I would expect that their cost into the applications, the technology side of it, with their capex would be more than $7 million a year, just from my experience in my professional life. So I'm a little surprised by that. Maybe their labor costs are a little bit cheaper, and maybe they're not expanding much on their technology side. I'm not sure, but it is a little surprising to me. But if we do take that, free cash flow from the previous year of $4.3 billion, that really gives you price to free cash flow of 37 times. Now, again, that free cash flow doubled in the last year and doubled the year before that, and I mean that's quite substantial. So if free cash flow doubles in the next year, which I'm not saying it's going to, but if you did see a double in free cash flow at its current price, you would see that price to free cash flow drop below 20, which would be a good indication to buy. Now, do I think they're going to double free cash flow? Maybe not. We'll see what the earnings release says, and so we can see what the 2021 is going to bring. But I think this is something you definitely want to keep an eye on, and it could be a good indicator could be an indicator on if they're going to be a good buy for future value. All right, so for Pinduoduo, if we look at Q1 2021 earnings, the analyst estimated negative 38 cents per share. They beat that by about 2 cents per share, coming in at negative 30 cents, at a loss of 30 cents per share, 36 cents per share. That's a 5% beat on earnings per share. On the revenue side, analysts estimated $3.2 billion, and they came in at $3.38 billion. That's a beat of $183 million. This is US dollars, and that's a 5% on revenue as well. So good results here. Didn't blow out estimates, but definitely beat them by a solid margin. So good to see there. All right, so let's go through the investor slide deck for Q1 2021. They got solid growth on their number of users, 31% of active buyers increase, 49% year-over-year growth on their MAUs. So this is getting really close to Alibaba's MAUs. Looking at revenue, it's up 239% over the last Q1 quarter 1 2020. If we look at their user base growth, 31% year-over-year growth, you can see that this jumped from 628 million to 823, and solid quarter-over-quarter growth. If you look at this nice line, doesn't look to be tapering off at the moment. Same thing with MAUs. You do see a tapering off on the monthly active users. So you can see that is definitely interesting. So we'll have to pay attention to that moving forward. If we look at revenue and gross profit, you can see that what they've started to do is break out by the number of merchandise sales. So said 161% increase in revenue, excluding the merchandise sale, which is something new that they've been doing. So that's interesting. This is in the Chinese currency, so just keep that in mind. This is not in US dollars on these slides. Cost structure, cost of revenue, looks like they had a sharp increase in the last 2 quarters in cost of revenue, 43 and 48% respectively. Sales and marketing expenses, those have also increased, but also has their revenues in the last quarter. Cost structure, profitability. This is one thing I wanted to pay attention to. Yeah, I was hoping this was going to go down, to be honest. I was hoping to see a downtrend here, but this isn't what I was hoping to see. I was hoping to see that these basically would stay flat close to this x-axis, and we wouldn't see a big negative again, but we'll have to figure out why. Look at ending cash and cash and yeah, okay. Let's see, a little less cash than they had a year ago, but not. I don't think that's a big deal. All right, the one thing, there's a couple things that I thought were interesting on the press release. So I highlighted it here. If we look at their cost, they did say there was an increase in cost, but when I looked at cost of revenue, there was a decrease from 8.4 billion in RMB to 8.3 RMB. So about half, and it's just interesting that the cost of revenues went down by half, but they were able to increase revenues in that quarter. So really interesting there for me. The other thing that I thought was interesting, if we come down here, weighted average number of shares outstanding, it went from 4.6, this is thousands, so I think that's 4.6 million to 4.9 million, and so that's a 7-ish% increase in shares outstanding. So this is, again, I don't like seeing this number increasing the way it is, so we got to pay attention to this, make sure that it's not continuing to increase quarter over quarter, or at least it's less than the growth that we're expecting to see. If you like this type of content, please consider subscribing, hit that like button, it helps me out a lot. Back to content. Next up, let's talk about shares outstanding. So you can see that they've slowly been increasing their shares outstanding over the last couple years. Over between 2019 and 2020, they increased about 4.5%. And then between 2020 and 2021, up to current date, it's increased about 8%. And the thing I really want to note here is that this is a high growth company. There are other companies that are diluting their shares at about the same rate. But when you are calculating your valuation off of Pinduoduo, I would highly encourage you to factor this dilution into your valuation model. And the main reason why I say that is if they're growing it, like for example, last year was near 100%, make sure you're factoring in that dilution when you're coming up with your valuation. So just keep that in mind. This does dilute existing shareholders. This is not something you really want to see, but this is probably one way they're raising capital or rewarding people that work there at higher levels to work for them. So it could be a good thing if they're doing it on that side. If they're using it to raise cash, their capex is so low. Like, why would they raise capital to do it? Their financials look solid enough that they could either do it through financing or do it through their free cash flow. So there's not really a great reason outside of giving shares to internal or basically people who they're trying to incentivize them to work at Pinduoduo. I think that would probably be the reason why shares outstanding is increasing. But again, just make sure you work into your valuation models. Make sure that this dilution doesn't cause you any pain down the road. Next up, I briefly want to look at the profitability. I pulled this from the fourth quarter slide deck. And the one thing I gave you the two circles here, and essentially what I'm getting out of this is it looks like profitability is trending in the right direction in the last 3 quarters. If we look at the 5 quarters leading up to it, you can see that that's basically been on an uptrend on amount of money that they've been losing. But in the last 3 quarters, that number is getting closer and closer to the x-axis, and I'm hoping in the next few quarters we can actually see that turn positive and stay positive. So I think from an investor's perspective, I'd really like to see that positive and remain positive, even if it's small. I'd like to see them operating at operating at a gain instead of operating at a loss. So this is something I really want to pay attention to. I'll get a little more excited about the name once they start actually generating profits quarter over quarter. All right, so moving into the price history over the last couple years, it really traded sideways for about the first year. Now leading up into 2020, before the pandemic, it started to trade up, and then it slightly decreased when the pandemic started, and then as all the other e-commerce platforms like Amazon, Alibaba, JD, basically anything that had e-commerce just kind of blew up in the first, really around let's say April of last year. And then it kind of trades sideways. And then around October, when the vaccine news came out, there was also another sharp spike in a lot of these names. And then a sell-off started happening around February. And this happened for a lot of technology as well as some Chinese stocks as well. So I'm not sure if the sell-off is completely done, especially, so there's a few things here. There's the e-commerce side, which I think still has good multiples, still has good growth, and then the Chinese stock. So there's been pressures on delisting, there's been pressures on really Chinese stocks in general with the delisting pressures, as well as fines being levied against places like Alibaba. And it seems like the Chinese government is going into these larger names, and Pinduoduo, even though it's smaller compared to Alibaba, it looks like to be a rising star, and so it probably will get increased pressure for basically that. So really it jumped all the way up to $196 back in February, and now it's trading back at $130 roughly right now. So that's a pretty big hit from its all-time high. Again, interesting. I'm not sure if it's going to go up or down from here. I think the earnings call will definitely help it go in one way or the other, but I think there are some external pressures like the government regulation that could continue to weigh down this stock moving forward. Next up, I want to look at some price targets of some of the analysts. So if we look at the last couple years in analyst pricings, you can see that Pinduoduo has done fairly well with tracking with the analyst expectations. And in some cases, it seems like the analyst actually, changed their price target after the fact that the stock moves. So even over the course of 2020, I mean, you'd see big jumps in the name, and then you see a huge cliff where it goes from here, and then you just see a huge jump in the average analyst. So What I expect to happen is these people will probably reiterate so they don't seem like they're wrong. But if it lasts for too long, you'll see another cliff. Instead of going up, you'll see the analysts come down. I think that Pinduoduo at their current value, with I talked about earlier, when we looked at their free cash flow, we looked at their free cash flow as a multiple, 37 times free cash flow. I honestly think that's fairly good for how much growth I see in this company. Like I mentioned, if you saw a doubling in the free cash flow like we saw in the previous 2 years, yeah, less than 20 times free cash flow forward looking, I think that would actually be a fairly good multiple for this company. I think that's fair. So if that's the case, do I think it's trading at a fair value right now? Yes. If it goes any lower, do I think it's even fair value? Yeah, absolutely. So as for a price target on this, I think 177 is probably a little too pricey. I think we need to see what's going to happen in further quarters before we can continue, before we can say that definitively. But if we can see this trend to continue as the pandemic resides, I think that we can start to get some more confidence in PDD, and I think it might be a good option moving forward. Also, one thing that you're going to have to keep paying attention to is shares outstanding increasing, free cash flow, make sure that's staying strong. You're going to have to look at the number of active users, make sure that's staying steady at least or increasing. And then the other thing you need to do is be paying attention to make sure the price per transaction is going up so you can actually get an increase on the revenue side and then free cash flow as well. So those are some things to pay attention to. Again, my price target is probably right around that average. That's fine. I don't have any issues with that, especially 12 months from now. I think that would probably be a fair price, considering that if revenues do double and free cash flow doubles itself, that free cash flow multiple of less than 20 is definitely fair value for a company that has such high growth in it right now. If you like this type of content, please consider subscribing. Like the video, it helps me out a lot with the algorithm and get this video out to a larger audience. Thank you so much for watching today's video. I hope you found it helpful. Frank Finance,